Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update today about the economy and the investment market so you can better understand what we see in not only in the current investment environment, but also how we are currently positioned and a few of the adjustments that we'll be making shortly. You know, the economy, as I've talked for many months now in the U.S., continues to slowly improve. I look at all the equity markets around the world, and almost every equity market, whether it's the U.S. or emerging markets or developed markets around the globe, continue to improve, but volume on almost every exchange is very anemic, probably 30, 40, sometimes 50% lower volume than what we've seen 5 and 6 years ago. Now, what does that mean to you, the investor? What that means and what that tells me is there's a tremendous amount of investors who are missing probably one of the best rallies we've seen in the last probably 10 years or so that's happened in the last 3 months. And the reason that's happened is a lot of investors, unfortunately, will not stick to an investment plan when it's temporarily not working, or they don't even have an investment plan, or they don't understand exactly how any investment market works. One of the things that we pride ourselves on is sticking to our discipline even when it's temporarily not working, and we've been well rewarded, and so has our clients. I continue to see big improvements not only in the U.S. economy, but in our client portfolios. We were well positioned at the beginning of this year. We continue to be so throughout this first quarter. We've got basically one more day tomorrow of the quarter, and we are looking across the board at many of our areas for income-oriented investors that have done exceptionally well. And I've talked about those preferreds. We're well positioned in preferreds and in global bonds and in high yield bonds for income purposes. On the growth side, and although we will have a change coming up tomorrow and on Monday, we have been well rewarded by being in small and mid cap in the U.S. and some of the small cap stocks on the emerging market side. I believe as we go through tomorrow's trading, I believe one of the sectors that we will be adding into our portfolio is some of the large cap counterparts in the United States. The United States continues overall, for the first quarter anyway, to really lead, generally speaking, most of the equity-based markets around the world. Now, that could change at every time. If the economy for some reason was to start to falter or change, our process is extremely adaptive and objective. If things change within our economy or the world economy and things happen to get weak, we're going to change our view and we're going to change our client portfolios. But right now, what I'm seeing, and I've said this before, is really an extensive stealth rally where the vast majority of investors are completely missing out. I can say that our clients are making the gains that are important in a market like this, and we'll continue to make those adjustments over the longer term. One thing that I want to stress to every investor, whether it's a client or a non-client, if you do not take a 3-year look at your overall plan, meaning if you worry about what's happening in 3 months or 6 months, you're not a good investor. You need to look at a 3-year average in order to really get a good gauge on how your strategy is working. If you don't look at 3 years and you just look at a quarter to quarter, you'll do exactly what a lot of small investors do, which is jump from investment strategy, or investment without giving it ample time to actually generate the returns that you're looking for. And I see this a lot. In fact, Delbar does a study every single year, and it basically ranks investors' return and investment returns, and investors, especially do-it-yourself investors, tend to do the worst. And the reason for that is they tend not to have an investment strategy, and if they do have one and it's not working, as I mentioned earlier, they'll tend to jump out of it and jump into something else that's hot at the time. And that really is a recipe for disaster. But with that, I want to assure all of our clients and potential clients that more important than ever, you need to really look at the macro environments around the globe and really include all asset categories. And these can be anything from currencies to gold, to short the market, to short the bond market, to long equities or long debt, and many in between. If you look at all asset categories and you use what we do in our portfolio for clients, our relative strength ranking, I believe you can be well rewarded yourself. But over and over again, I'm going to look at what the government's doing, We're going to look at how they're handling not only monetary policy, but also how we're seeing global events around the world and how those are unrolling. One of the things that we're seeing is every time we see a little bit of a sell-off in most of the equity markets, it's basically bought by institutional and smart investors, and we seem to go to basically new highs throughout this first quarter. I think that will continue because, again, I believe a lot of the scared investors who were not smart investors from the get-go have bailed out of real investments, are sitting in cash, or have overloaded the bond market in their portfolio and are extremely suffering year to date. I think that's going to continue. And I think smart investors who are really looking for the true opportunity, which in my opinion is some of the equity markets around the world, are going to be the biggest rewarded investors. This is Brian Resney. If you're a client and you have a question about your portfolio, please call the office. If you'd like to become a client, we always like taking on nice people who want to better their situation. Call our office for a consultation. We'd love to talk to you. Until Sunday's show, make sure you have yourself an extremely profitable week.